Hey guys and girls, Nathan here. A little bit dark. Hopefully the internet connection is well. Thanks a lot for tuning in, everyone. As always, it is good to be back. I've been excited to hang out and catch up with everyone, and have chats about all the things that are happening in the world today. So just with a couple of things, yes, Olivia, sunburnt up in sunny Cooktown at the moment in the Cape York of Australia, which would be at the top, right up the top of Australia. So yeah, just in the process of acquiring and doing a handover of a motel, and yeah, just in it. I was going to go outside, but the sun is setting, and I didn't really have anywhere. I literally just got to town right now and plugged in to get our Facebook Live happening. So apologies for the darkness and all that, but yeah, wanted to get online and have a chat with everyone. So hopefully everyone's doing well, and thanks a lot for tuning in and catching up. There's lots of things that have been happening in the world this year, and those things I want to talk about, and lots of things been happening on my front as well. So so far this year, I've acquired 7 motels. It's 7. Don't want to yell it out all too loud because there's lots of people around here at the moment. But yeah, lots of things happening out there. Lots of cool projects that I'm working on. The market has been extremely hot out there. Looking at all the markets, everything's going up in price. There's a lack of stock out there. Everybody's loving cheap money. I've just seen today someone sent me a news article that was on realestate.com talking about inflation. I'll throw that in the Birch feed a little bit later. But yeah, lots of cool things happening out there in the marketplace. So any questions, if there's something or a topic that you want me to discuss today, just chuck it in the comment box. I'm just going live on Facebook because unfortunately, being on the road, I didn't have access to all of my gear, and yeah, getting access to Instagram on my phone is all too hard. So just straight here on Facebook Live. But yeah, so as I said, just settling on a motel. This area here is like a Mills area in a motel, but there's a little bit of talking outside and stuff. There's a full-on motel with a lot of pools, and this one here is a 32-room motel, as I said, in the top of Cooktown, Cape York here. So that's what I've been up to. Enough on me, and over to you guys and what's actually happening in the marketplace. So the first thing I want to talk about is interest rate news. There's been talks of potential interest rate rises coming out of the news, and that is probably my most exciting topic of discussion for today. You know, they're talking about interest rate rising. I've been talking about interest rates falling. Are they going to come down? Are they going to go up? What is going to happen? So that will be my exciting discussion for this evening. If we look at the bond yields, so as I've talked to you guys for years, is about the, if we look at the bond yields, like the 12-month, the 3-year and the 10-year Treasury notes, whether it be in Australia or US or any other market around the world, basically the bond yields sort of determine and trend a line where the cash rate follows around all the central banks around the world. Looking at the central banks and their policies at the moment, we're sitting at, here in Australia, 0.1% or 10 basis points, so 10% or 1% interest rate. But we've seen the bonds, which base interest rates on, they've got a massive upswing up to almost 2%, which would indicate that interest rates will normally rise. That is why I said we would see the GFD, the global financial depression. For a very long time, I've talked about the depression that's coming in, and we're in it. They've papered over it. 2020 was amazing for that, and 2021 is showing very much more exciting, you know, problems that are out in the world. So don't get fearful of the fact that, you know, these things are occurring. It's all a part of the process for us to end up to the end position of negative interest rates and the collapse of our currency. So what do they do? You know, are we going to see the interest rates rise all the way up, sort of to 2% all the way up to 2%. It is a possibility, but the chance and likelihood of that happening, I think it would be, a smidgen of a percent, not even a scary of a chance that it could possibly happen, because if interest rates go up, basically the whole system and the whole deck of cards and the whole Ponzi scheme that we're living in will fall apart. Ultimately, what is going on at the moment is a thing called YCC, which is called yield curve control. Basically, the yield curve is being controlled where they are artificially, with the central banks around the world. Basically, if there's not enough buyers of the bonds, the yield prices go up. If there is too many people buying the bonds, then the returns become lower. So if the bond yields are going higher, that means that no one is actually purchasing the bonds, meaning that someone has to buy them for the yield to come down. So in essence, the central banks are going out there performing yield curve control by buying up the bonds, and when they buy those bonds, it artificially keeps the bond low and the interest rates are kept down and suppressed lower. However, that's causing a bit newer problem, and that is a fun problem, right? And the problem that it's causing is the more bonds that they are buying, it means the more liquidity that's being pumped in the marketplace, meaning higher levels of inflation. So people that are out there questioning why their car has gone up in value, why metal has gone up in value, why delivery and shipping of goods has gone up in value, it is all determined to the amount of liquidity that is swirling around in the system. So looking at that system, if we look at a few things that are out there, going back 12 months ago, it would cost you about $1,800 worth of raw material, being the metal and the plastic, to go into a vehicle, and the glass to go into manufacturing a vehicle. Now that has gone up to $2,900. So it's gone up over half. Sorry, I'll fall back. I've been driving a lot. It has gone up quite significantly, like 50% higher in the order of cost of materials just for the vehicle. If we look at the cost of delivering goods, so shipping control, there's a Baltic, I forget the exact term is, it's a Baltic index, which is basically the cost of shipping and the rates of shipping. Shipping of items in cargo containers have gone up massively. The cost of shipping containers have gone up massively. This is stuff that cannot be manipulated. We can manipulate the fuck out of here we go, the first swear word for the day. They can manipulate as much as they want out of the financial instruments, the paper, the currency, as much paper over as they want, but some things will ultimately crack, and that's what we're starting to see in this system. And these are the first cracks, right? There's been cracks happening, but there's more and more cracks that are appearing, and how do they bandage these problems up and tape it together to stop it from imploding? And that's the big question. So, will we see interest rates rise? There's a potential that interest rates may rise, but if interest rates rise, then everything else falls apart. So they're going to have to do everything that they can to keep those interest rates down, and in the process, they are going to devalue the currency, which is what's happening at the moment. By printing too much money, and everything's starting to go up and go crazy. So very, very exciting time to be alive. So questions here, I'm just going to go through to the chats. Miss you, Facebook Live, good to see you. Good to see you guys too. Brisbane, Sydney, Melbourne this year, everywhere. Nathan, captured by ISIS, no. I literally just rocked in to Cooktown in the Cape York. So imagine where Cairns is and keep going another 5 hours. That's where I am right now. It is hot, it is warm, and I was going to sit outside and do it, and it was like terrific, beautiful park out there. However, the sun is setting and you would not see me at all. So I just thought I'd sit here, and there was a picture of a map behind me, so I just thought, let's go to Australia, and here we want to own the whole country, so here we are with it in the background. So with it, next one's Mr. Tuesday Night, Birchie, Olivia, good to see you. Danielle Smith, good to see you. Mark, yield curve control plus more money printing. Exactly, Mark. The level of printing that we're going to see this year is amazing. We've seen a lot of it in 2020. Everyone, all those negative people out there saying, oh, the sky's going to fall in and doomsayers and all that. I said 4 years ago, we're going to see a depression of biblical proportions, and we would see tremendous outcome from that. And we've seen the depression, we're still going through the depression. This is an inflationary depression, hyperinflationary depression, where people will eventually be too poor to afford anything because the cost of goods have gone up so high. So that's the exciting things. Mate, can you upload these videos to YouTube so we can watch them at 2 times speed? Yes, these videos all get uploaded to the YouTube channel. So if you head over there, youtube.com/Binvested, it will be uploaded probably about 24 hours after it is done. Who is the truck driver and what have you done with Nathan? Still here, just got me wife beater shirt on. Yeah, good to see you, Matt. Yeah, it is hot. It is very hot. I went for a big walk yesterday around the Esplanade at Cairns. Went for maybe like 3 hours worth of walks. I was on some map sessions with people and doing strategy sessions. I was walking around the Esplanade and it was great, but I didn't think about the no play rule when I was younger, and ended up getting a bit sunburned as well. So yeah, with it, some other things are happening in the marketplace apart from interest rates potentially rising. Right, we know it to listen to the news. The news told us that everything was going to implode last year, and to be scared of everything that's out there, which we're seeing quite the contrary of. So just be alert, be vigilant. Anything could happen. Interest rates could go up. I don't control the levers at the back end of the central banks. My thoughts is if they were in some instance to push interest rates up and lose control of the yield curve control on the bonds, that could mean that they might go up 0.25% or 0.5% in a worst case scenario. We saw this happen in the US between 2018 and 2019. There's the central bank chairman, Jerome Powell, in the US. He said that he was going to go from quantitative easing to quantitative tightening. He tried to reverse monetary policy, and then after 2 or 3 rounds of pushing interest rates up, it was probably about a 6 month, 12-month period. Surprise, surprise, here we are with the beloved disease that everyone's getting this done to them today. So that's a fun thing. So what are you doing up here? I am buying properties. I buy properties everywhere. So we've got the map behind us. But looking at where I'm at the moment, I'm in the process of a transition. I've got my transition team here that are coming in and arriving today for a handover of a 32-room motel, and we're going to rebrand it and get it all up and running, and it's fully booked actually at the moment, but yeah, just do the transition and add another hotel into the group. So looking at cryptocurrency, a lot of people ask me what's going on with Bitcoin, what's going on with crypto, should I buy into crypto, right? I was talking about cryptocurrency for years. I've been talking about it. I bought into it when it was like $500, right? I thought it was a good investment over there. But at $80,000, am I rushing out to buy it? No, right? Does that mean that I don't think it'll go to $1 million? Yeah, I think it'll go to $1 million. That's my thoughts on it. Will it happen? Who knows? Reality of it is that at 80 grand for a Bitcoin, it has the ability to go all the way down to 3 grand where it was last year, as well as it has the upside potential. So just be really cautious out there. It keeps hitting all-time new highs. I think it has so much room and so much growth and a vortex to suck up a lot of this inflation. It's a ballast, just as I always talk about with precious metals or cryptocurrencies or debt or cash as a ballast. I see that cryptocurrency is also a ballast to suck in liquidity as well and help absorb the hyperinflation that we are going into and we're entering into for this next 10 years. Over this course of this next decade, there's going to be so many people out there going, oh, I'm such a guru and I've done it right and all this sort of stuff, but without realizing the parameters, right, of what actually controls this market. And I guess that's where there's trucks going past. There's a lot of stuff happening around here. I'm really surprised and impressed. But yeah, looking at this decade that's going to be ahead of us. We've heard of the Roaring '20s and the 1920s, just before the Great Depression. A lot of people are thinking they're very smart at the moment and doing all this great stuff and whatever. We're all living in a Ponzi scheme. There is a lot of Tom, I will call you soon, bro. I will call you soon. There's a lot of opportunity, but there's also, it's all built up via cheap, easy, available credit, which is a debt bubble. And one day it will burst. It's not today. They're going to do everything they can to keep prolonging this and kicking it down the road. So when it comes to Bitcoin price, am I buying? Am I selling? I'm just holding. Have I purchased any cryptocurrency this year? I have. I've bought some small holdings of a few things, $100 here, $100 there, $100 there. Probably spent maybe $3,000 in total. Some of those $100 holdings have gone up to $3,000, $4,000, $5,000, which is cool. But there wasn't any skill behind it. It was just a matter of acquiring some of the tokens that are out there and watching them do their thing. And when they go up sort of 20 or 30 times, I sell them off and I swap it over for fiat and go and purchase some more metal, because that's where I'd rather put my money in 2021. And I guess that takes me on to my next topic for today, which is a thing called the silver squeeze. There's a group out there, for those of you that may or may not know, on Reddit called Wall Street Bets. They did a thing called GameStop. They pushed the price up and tried to squeeze out all the short sellers from the stock, and it saw the share price, basically a zombie company, as I call those zombie companies that are out there, which was trading at like $3 or $5 or something like that, went all the way up to about $350. Once again, a pump and dump, inflated zombie debt bubble, which is just another Ponzi scheme out there in the financial instrument space. This thing here has crashed and it went back up, but this group on Reddit called Wall Street Bets have come out and they wanted to do a squeeze on the stock and push out the short sellers. So basically the short sellers have to buy the share, and if everyone starts buying up all the shares, it pushes the price all up, and then the short sellers will lose money and bankrupt, in essence, the short sellers, and then they lose all their profits and all their money, and the people that bought the shares that they have to buy from get the opportunity to make the money. So what they have done is that they've turned to silver, and the silver market is one that could be one of the highly most manipulated markets in the world. And once again, I'm not advocating to go out and purchase silver or by any chance. As I said multiple times, I've been buying this stuff for 20 years. I don't go out there and go, oh, it looks like it's a great buy, let's go buy a whole pile of it. It's just something to be aware of what's happening out there. The market, if we look at the COMEX and the paper market, a lot of people ask me about ETFs and stuff, and for the government institutions that like to watch this, the regulating authorities that think I give financial advice, it's 2021 and I still say get fucked. None of this is financial advice, everyone, so just as my little disclaimer. But looking at the ETFs and the COMEX market, which is the securities market which trades SLV, which is silver, as a paper contract. This has seen a lot of depletion of stock and liquidity in that market. And there is a potential, no bullion dealer has any metal at the moment. So no one's got silver, no one's got gold. Doesn't matter if it's all the way in Melbourne and a bullion dealer there, or whether it be one in Cairns. Right? I go to these places, I speak to them. I was in one of the stores this morning asking some questions, doing a little bit of research, asking them a few things. They said, no silver, no gold, nothing here, nothing to see, can't see anything, can't help you. So what will happen if if they do this Wall Street bet style silver squeeze on the COMEX? We could technically see the price of silver go up massively. And think about it, if we go back throughout time and think in 1980, right, and this is why I don't advocate, and I'm not a big fan of silver either, but I still hold a part of it, is that in 1980 silver used to trade at $50 US. It trades at 26 bucks, 27 bucks, whatever it's trading for since the last time I saw it, US at the moment in 2021. What other item, what other asset, what other instrument, what other investment has lost 50% of its value since 1980? That's 40 years. It's lost half of its value, right? Everything else has gone up sort of 8 to 12 times. Look at the cost of food, look at the cost of property, look at the cost of a vehicle, look at the cost of everything. It's all gone up 8 to 12 times in the course of the last sort of 40 years. But silver is still half the price that it used to be. So could that be something that happens in 2021? Is that something I see happening? A lot of people are messaging me about the silver market. I think it could be. But people have been trying this for years. It is a very, very heavily rigged market. And, who knows? That's the fun part of it. So, looking at, so there's a bit of noise in the background as those of you that are just checking in now. I'm in a motel in a communal area, just doing this live stream. So if it does get noisy or people come in, do excuse me on that front. Just wanting to be here and have this chat. So looking at what's happening nationally in the property markets, I probably 2 weeks ago, 3 weeks ago, something like that. In the last couple of weeks, I spent a whole day just researching every property in New South Wales and Queensland with one bedroom all the way up to $500,000. I know exactly what I'm looking for. I just flick through. I've been flicking through, just scrolling through. Like literally, imagine Tinder, instead of going left and right, I was going up and down on realestate.com app until it freezes at a certain price range, because you can't go through more than like 10,000 searches of properties, and then it freezes and then you have to restart the search at that level. But I did my regular search like I do, and it took me like 8 hours of just scrolling through, not even going into the property, just scrolling through. And I observed something very, very interesting. I've never seen this. I'm probably the 0.00001 in the top 1 or 5 users of realestate.com account in the whole country or on the whole platform, and I've never seen the amount of, or the lack thereof, of new stock coming in the market. So there's less stock coming into the market. People may not be selling it or whatever the case may be, and more under contracts than ever before. And I don't just mean under contracts in the Gold Coast or Brisbane or Sydney or anything like that. I mean from top to bottom. Doesn't matter what little place in the country, everything is being sold, and a lot of stuff that's under contract. And I've never seen anything like this beforehand. And it just goes to show that there is a lack of stock, a lack of confidence in our currency, a large amount of people with access to cheap credit, and that access is getting easier. The banks, granted, their service is very, very shit at the moment, and they don't have turnaround times for loans are very, very long in order to be able to get that. However, the amount of money that's starting to be printed, like people are pulling equity out because asset prices are rising. People are starting to, and there's a bill that may or may not be getting passed. They said it would be. Josh Frydenberg said in March 2021 they'd be announcing a bill to revoke responsible lending. If they revoke responsible lending, that means that it'll become even easier for people to obtain debt and get access to this cheap money. It's going to keep pushing these asset prices up. So really exciting to see. If it was up for me and what I would want out of the market, I would love to see property prices collapse. I said that they would going back 4-5 years ago in 2016 and 17. Everyone said, Nathan, you're off your head. Why are you talking so negative? However, the prices did take a dive. They did come back in a lot of places 10, 15, 20%, but now they've all shot off and recovered all of those losses of what they've had in the past. So very, very hot markets out there, just almost as hot as the humidity here. Got a dog walking in here. This is cool. looking at rents, what is happening in the rental market nationally. I have seen rents rising end to end of the market. We just settled, literally, we've got a flyer. This is pretty funny. Peter just said, today's news that the responsible lending has been pushed to May. That is not so good, but I'll go research more about it and put it in the birch feed. But we've got this map here, and we actually just did a map for some marketing for Blink Property, which is my property management firm where I look after people's rental properties. And I saw it came across my desk. My marketing team asked me for approval and whatnot. And basically it had a coast of Queensland. It's for my Queensland branches. And it had the coast of Queensland, and it had these little pins everywhere of all the rent increases that we've done where we've been picking up the property. So when I buy the properties, I buy them through a real estate agent, for you guys being my investors, and I look at the rents and they're way too low. And basically the rents on those properties that used to be maybe $150 a week are now sort of $180 a week or $200 a week. So there's a lot of activity happening in those markets. So on the rental market, that's that. Hey, how are you? Yes, good. With it, over to you guys for questions. If you guys have any thoughts or comments on what you're seeing in the market, or questions as to what you would like to know is happening out there, because it has been a while since Birchie has been on these Facebook Lives. So, Looks like no questions for everyone. So is it going to be a short Facebook Live or not? I'm going to try and be more regular. I have, for those of you that are like, what happened? Where's Nathan been? I have been really busy. Have had lots of things going on. I just got asked from Tom, when am I opening Blink Property in Canberra? I've got all the licensing in place, almost ready to go. In Melbourne, same thing, in Adelaide and in Perth. So in those 3-4 states, we'll be going into those 4 states very, very shortly. So if you have properties, I would like to manage them. There's a lot of compliance and setup and HR and all those sorts of things that happen with setting up multiple offices nationally. So just on the rental front, like I talked about the Queensland going up sort of $30 to $50 a week on average. In Sydney, same sort of things happening. In areas like Central Coast, Port Macquarie, down on the South Coast, in those regional coastal sort of towns, rents have gone up dramatically over the course of the last sort of 6 months. So if we look in Perth, over on this coast, I have got one of you that are watching that bought a property in Western Australia, was renting for $220 a week, I think, from memory, and the rent's gone up to $370 per week recently. A lot of stuff around the Perth CBD has gone up, sort of $50, $60, $70 per week. So rents are very much so, benefiting from inflation. In some markets they're a bit softer. In some markets they're much, much higher. So looking at what other questions I've got here, what's happening in Melbourne? I don't know, is Melbourne in lockdown again or not? I've seen, activity is still strong in Melbourne. In all states, it is strong. Am I investing in Melbourne? I bought one property for myself this year in Melbourne. It's not that I hate Melbourne. It's not that I'm against Melbourne. I just think there's better value in areas, some parts of Sydney, some regional parts of New South Wales, and a lot of places in Queensland, a lot of places in Perth that have been very, very active in. But just Melbourne, I think that it's still overcooked. I think it's overrated for what it is. So that's nothing bad against Melbourne. It's just what I see it is in the market. Where is a good regional area to buy in? It's a good question. I don't disclose where I go to buy. I run a buyer's agency where I locate and negotiate deals for my investors all the way around the country. One of you that are on here, I think I spoke to you Are you on here? Did I see you on here? I haven't seen you on here actually yet. Just bought a property today where we actually bought a duplex where you buy one and you get one for free. So there's some really good options out there still. There's still properties to buy below market value, but if I give away all my secrets on where I buy properties from and why I buy them, then no one will want to come to me. So I can help out by locating those deals and negotiating on behalf of my investors. Matt, what are your thoughts on the Brisbane middle ring, 10 to 15 Ks out house prices? They're going okay. They haven't gone up and skyrocketed like some of the areas in the Gold Coast. The Gold Coast has certainly by all means have outperformed all the other sort of areas that are around that, which is why we're very heavy on that market over the previous sort of 4 to 5 years. Everyone goes, oh, you're just buying the Gold Coast. It's like, no, I was buying on the Gold Coast because I saw value. And then I've somewhat retreated from buying so much there of recent times because the opportunities don't present themselves as much as what they used to. As for Brisbane, still picking up some bargains out there. I just did a deal on a 2-bedroom unit for $240,000 maybe 3 months ago for one of my investors. It was probably about 5 Ks from Brisbane CBD. Bought it for $240,000. We revalued it straight away for $350,000, meaning that he could pull out 80% of 110 grand or $88,000. So there's still good deals out there. Putting up rent at a time like this seems dangerous for the investor. If the renter leaves, it could cost to get a new renter. There's areas that are very, very hot, and there's areas that aren't. So there's some markets which there's just no stock out there in the market, and rents are rising dramatically. So it depends where your property is located. Certainly, by all means, I wouldn't be putting up rents in every location, but you should be reviewing your rents because a lot of your rents have gone up and people haven't realised that, and they're getting paid a lot less than what they should. All of my portfolio reviews and strategy sessions with my current investors that I've been doing of recently, I've been reviewing the rents and being like, okay, this one by $30, this one by $20, this one by $50, and they're walking away with an extra $150, $200 a week in their pocket. So there is an opportunity and scope there, but it's important to make sure that you're being realistic with your rent increases as well. Brad, hey Nathan, what are your thoughts on the Cairns, Northern Beaches, Trinity Park, etc. near the university? I'm a fan of Cairns. I bought there when everybody hated it. The cheapest property I ever bought in Cairns was $20,000. I bought a few of them for myself and for my investors. I've never really spent more than like 120, 130 grand in Cairns. For the larger amount of money, and I'm assuming that's what you're talking about with those figures, I think you can go buy better value properties in different locations, whether you move further down towards the Whitsundays area or even further south in Brisbane or Gold Coast. You can find property for the same price as what you could in Cairns, but a much larger sort of population, which is more preference to myself. Spending the last 2 days in Cairns myself, I noticed the lack thereof of tourism in town and the lack of people that are actually in Cairns at the moment. So watched a video where it said 30% of mortgages are 30 days behind in payments. Doesn't that mean unemployment is rising or the least money problems for the public? Increasing rent could be problematic for the investor. It depends on your demographics. Certainly some markets have got more unemployment than others, but all in all, with the amount of stimulus checks that are going out there and whatnot, there's a lot of people that are doing very well as well. So it's important to sort of bear that in mind. Trent, how's the Gold Coast project coming along? I'm assuming you're referring to the houses that are there. I was going to build a block of units on that site. However, feasibility wasn't there. So unfortunately or fortunately, one of the houses burnt down, which left scope to access the back of the other properties there. So with the sort of situation there, my view is to to remove and move and relocate about 6 houses back in those backyards and those homes. So I'll keep you posted. I might actually go do a video out there next week when I'm on the Gold Coast. So Danielle, with the credit debt becoming so cheap, do you think before inflation truly kicks in, we will see a bit of a lull in the rental demand as rentals will become owner-occupied? I actually think that's what we're starting to see, and we have been seeing for the last sort of 12, 24, 36 months, especially in areas like Sydney, where things have been a lot lighter on that front. So yeah, we could, but I think we're already seeing that at the moment. And then when we start seeing things rise dramatically, we will see the rents naturally drag that up themselves. You've been hitting the gym. No, I think I've just been, maybe it's my muscle top. Yeah, I feel like my chin's gone a little bit, but I think maybe just eating a bit healthier, cut out any sort of water or liquid that goes in my throat that's not water. So yeah, just losing a little bit of weight on that front because I was a little bit on the heavy side recently. Matt, do you think there is still growth in Tasmania, especially Launceston? I'm not a fan of Tasmania because it is off the mainland. That's why it's down here somewhere. It's not even on the video screen. With the Tasmania, I've never invested there. I would rather invest along this area and predominantly the whole coastline there rather than off the map with hard access to it. So just my personal thoughts. You can buy properties in Sydney and Brisbane and Perth, which are sort of better sort of value than what you can in Tasmania. So that's just my two cents on that front. Daniel, have you used a business coach or a mentor to grow as a person and on a business sense? No, I've had people come in my life, like, as a part of a group of companies. We've got about 100 staff within the group, and a lot of great people over the years as well that have come and gone throughout the business, and always like to be open to feedback as to what we can improve upon and what processes we can add and what works and what doesn't work. So everyone around me, I think, is a coach and a guide to work out better ways for improvement and better ways of doing things, and ultimately coming out with a better results. Sorry, I've got heaps of messages coming through on my phone as well. Burnt down, wink, wink. No, it did actually burn down, but it is what it is. Virtue legend, thanks guys. You guys are legends. Prajwal, is this a good time to start on property portfolio from 2 properties? Look, it's never been cheaper for money out there. Debt has never been cheaper. I think there's a lot of great opportunities out there for me personally, being very active in the space recently. Going back about 5 years ago, I actually told everyone anti-property, right? And imagine hearing that from Nathan, right? Everyone's like, oh, what's Nathan saying, this sort of stuff. But it's just due to the fact that the market where it was at the time. I think there's a lot of opportunities in the market today for people to profit and to make things happen. So certainly I can see people that are here and watching this live stream today, which are just everyday people, which have built very nice property portfolios over the course of 2020 and kicking ass in 2021. So I've seen people go from more people go from 0 properties last year to 6 or more than any other year in the business existence. And it's not just because of more years that we've been in business, just because the opportunity, the timing, and the position of the stars aligning has probably never been greater. So I've seen some people that have bought sort of 14, 15 properties in a period of 3 months in the course of the last 6 months as well, so which is pretty cool. So if you need help, reach out to my team, hit us up at admin@binvested.com.au, give my team a call at 1300 367 925 and speak to one of my investor relation managers, and they could if you want me to have a look over your portfolio or whatnot, give them all the details. I can have a quick look and give some feedback and direction as to what I would do, and they can come back to you themselves. So with all my investors that I work with on a day-to-day basis, I sort of take a very active role in making sure that, you know, as their portfolio grows, that every step I'm seeing how I can refine it and tweak it and push them in the better direction closer to their goals. Andrew, we will be in Sydney in 3 weeks from today, providing borders remain open. We'll pop into the office. Andrew, I will be back in Sydney by then, hopefully, and look forward to meeting you. It'll be good to finally meet you after all the time that we've seen you online and chatting over the course of the last 12, 18 months. So, yeah, look forward to that. Sam, keep up the good work, mate. Appreciate it, Sam. Hope you are well and awesome at your end. Tom, what about poor old Adelaide? Hasn't had a mention for a while. Where does it sit in the market of your eyes? Adelaide, if I had eyes at the back of my head, they'd be facing Adelaide in our little map here. I shouldn't say little, it's about 6 foot by 6 foot. Looking at the opportunities that are in Adelaide, I'm not very active in the market at the moment, but I have seen some activity, which is the first activity I've seen in Adelaide for a very, very long time. But I think there's just a natural part of the cycle with the prices rising everywhere. So is it real growth? Like some markets have seen abnormal growth, right? In the course of the last 12 months, I've seen markets which have literally doubled in price, like, you know, 100 grand to 200 grand and that sort of stuff. I've seen a lot of markets go up sort of 10, 15, 20%. Adelaide is one of those markets that's going up, but not abnormal sort of growth in my eyes. So, yeah, with it, not that there's anything against Adelaide. I actually do own property in Adelaide. I have 3 properties in Adelaide. I bought them maybe 5 years ago. I think I bought them for like 100 grand each. They're probably worth about 200 each now. So that has had, you know, some good, you know, sort of growth there as well. So, yeah, any other questions from the team this evening? I know it's a bit of a weird Facebook Live because I don't have all my gear set up. It's a bit dark. There's been noises in the background. Literally there's a commercial kitchen over the other side of where I'm sitting here at the moment. And yeah, I had to make do so I could be here for you guys this evening. So if you have been missing... Sorry, I forgot my water as well. If you've been missing my Facebook Lives, I will be continuing to do the Facebook Lives. You know, they will be ad hoc, so I'll always keep them to a Tuesday. If we're going to do these, they're going to be Tuesday. They're going to be at the same time at 7 o'clock Sydney time. And I will do a more ad hoc. I will try and fit more in. But I have been putting out a podcast, the No BS with Birchie podcast, which you can get on iTunes, on Apple, Google, and Spotify. And obviously at the B.Invested website, you can find out more about it there as well. So, yeah, with it, questions. Mick, hey mate, what is your prediction on the current growth we're experiencing in Queensland? Do you think it will continue into 2022? What we've got to remember is that when properties do go up in value, it's not just the property that's going up in value. The person that is owning of that asset has now got new equity or new capital that they can attack into. So the creation of that money supply, if that person and the psyche of the people continue to go, okay, we can get more money and pull out the equity and buy more properties, then that means that there is going to be more currency creation and more liquidity going in the system, and then more demand and more pushing up the prices. So do I think it can continue? I think we're in the perfect credit environment for that to happen. We have not seen ever a credit environment like where we are at the moment. It is really amazing. I still laugh about it every day. I'm the happiest motherfucker that anyone has ever seen, just due to the amount of, you know, manipulation and basically fraud in the financial system and the devaluation of our currency, which, you know, is benefiting a lot of people that have assets and have debt and have cash flow and stuff like that. But it's not all rosy for everybody, and that's why it's important to get your house of cards in order. And get yourself structured right to be able to benefit through this. But yeah, I think we will continue to see the market very, very hot over the course of this year, next year, and for many years to come, because the money creation can't be wound back. They can't let this thing go back to where it was. They've got to keep printing money, more and more cheap money, which will cause higher and higher amounts of so-called growth to asset prices. Jesse, interested to hear your thoughts on my hometown in Wollongong, Illawarra. Also, some sun. Also save some sun, mate. I'm heading up to Cairns next week. Well, enjoy in Cairns if you do go up further to Cooktown. I've been here for the first time today. It looks pretty cool out there, like some fishing spots, and lucky enough I had some rods in the back of the ute, so I might go out and fish later on tonight, do some emails and then do some fishy. But yeah, as for your hometown in Wollongong, I'm very familiar with that market. I actually am not invested in the Wollongong market at all. I know a lot of people that are invested in there. What I have seen is that the market there, just as it has on the north coast, it is on the south coast of Sydney. Prices have risen dramatically. A lot of people are moving there for lifestyle. They're realising they're not needing to be in a job in the city where they have to hop in a train and all that sort of stuff. I was talking to a new investor tonight. You're probably watching this. We spoke a little bit earlier this morning as I was driving to where we are now. Yeah, he mentioned to me, you know, I can live anywhere in Sydney. I'm not tied to a job anymore. I can work from home moving forward. So that has given a lot of opportunity for people from lifestyle and has certainly pushed up the prices, whether it be in the South Coast, Wollongong, Illawarra, Newcastle, Central Coast areas. A lot of rises happening in those markets, a lot of activity happening there. Rob, RBA reckons prices will go up by 30%. What markets do you think have the greatest capital growth, Sydney and Melbourne? I'm not fixated on any market. I want to see where the value is. So I'm a contrarian investor, meaning that I buy shit when it's on sale. I don't buy it when it's hot. It's like saying, what's better? Like, should I buy in the Bitcoin now? No, you should have bought in the Bitcoin when it was fucking $3,000 last year. And $80,000 is not the greatest investment. So just because the RBA says that the market's going to go up, they're full of shit and they never get it right, because I said last year the market was going to crash and it boomed. They also said that they weren't going to be dropping interest rates, and they've dropped interest rates 6 times since they said that statement. And I said that that Lowy fucking commie guy, that he set out that interest rates are going to go up, right? And I said at the time, no, within 90 days, not before 90 days, and not after 120 days, we would see the rates fall, and they did start falling, and that was just understanding what's happening in those markets. So looking at what's happening in the markets, I think we could very well see that, but don't believe what you see in the news, guys. It's all a fucking scam. They're there to pump promotion and propaganda, just as Kim Jong-un sells propaganda to all of his people about how he's some fucking magician. The same thing that government, central banks and the controlling interests are doing with our media for us. So do I think we're going to see 30% growth? Who's to tell how much growth we're actually going to see and in which market? But I have seen some markets in the last 12 months which have gone up 100% in value and doubled in price. And I think we're going to continue to see some of that. And some of these properties in large capital cities that have gone up sort of 40 or 50% since this time last year. And I think we're going to continue to see that. So you can have the outer market or the inner market, and the outer market's obviously rising with the level of money printing out there. But the inner markets, there's lots of moving parts. Some markets that were very damaged beforehand, which have got good up. So think about it, right? All the stock that have been playing in, all the so-called rats and mice, all those people with the egos with their properties, and they go, oh, virtue buys shit, right? And it's like, maybe I do, right? But it works, and that's what's made me, where I am today. Those rats and mice so-called properties at $100,000 or $200,000, if you bought a property for 150 grand and you put down a 20% deposit and you had a 120 grand loan, 120 grand loan at 3% interest rate would be $3,600 per year. That would be less than $80 per week. in interest that it would cost. So if someone could buy a property for that price, it'd cost them less than $80 a week. You might be getting $250 a week rent. So in those areas, there's going to be a lot more demand, and the people can service for that, because you can basically service for something like that on JobKeeper, and we would see that market get a lot of fire into it. The top end becomes more volatile in that scenario. So we need to look at inner and outer markets and look for those opportunities as they arise. Jono, good to talk to you. Good to see you back. Thanks for the chat today. My pleasure. Check your email. You should have some goodies on there. You've got a little bit of goodie there, and you're going to get some more emails after this live, maybe in about 2 or 3 hours from me. Preet, never thought I would be leveraged that much. Thanks, mate. Looking forward to more to come. Mate, you're kicking ass. You're doing great things, and it's been a pleasure to assist you on that journey and help you. And that goes to everybody out there that watches. Luke, what is your thoughts on the Newcastle market? I talked about it beforehand. A lot of activity happening in those areas that are outside of Sydney and whatnot. There is a lot of stuff happening in Sydney, so it's basically there's a boom everywhere on the map, right? Everywhere on that map behind me, there is a boom occurring at the moment. Nearly all those places, and it's very rare for this to occur because I have never seen it. Normally, there's Perth. Where's Perth? Perth's over here. Perth's doing shit, and then Sydney's doing great, and then Sydney's doing crap, and then Queensland's doing great. This time, we've got all of them going around. Reason being is just manipulation of the monetary policy. So, Daniel, how do you define hyperinflation in Australia? I think US will get, Aussie will get inflation as far as I know for now. Well, it depends, right? What is your definition? My Polaris is a quad bike, like an ATV sort of bike. Took it in for a service recently, maybe like 3 months, 4 months ago now. The thing I paid $5,000 for. I thought, I'll just ask him, I'll just swap it over, give him a couple of grand extra, get a new one. 15 fucking grand for a bike. I'm like, nah, change the oil, put some new batteries in and whatever. Things are rising dramatically. A lot of people have got less and less money today, just due to the fact that they might be getting the same amount in their pocket, but they're spending a hell of a lot more just to get by, and that is the first stages of a currency debasement. So we're not seeing hyperinflation today. As I said, I did a video in March 2020. I drew up a video saying hyperinflation on it. If you go to YouTube and check out Nathan Birch, B.Invested, hyperinflation, you probably see the video, me with a black shirt, white shirt, some sort of shirt. I was at least wearing a shirt that day, and a whiteboard with a texter. I talked about the hyperinflation. I said it would probably not occur for 3 years, but somewhere in the next sort of 3 to 7 to 10 years will be the time frame which you just notice it compounding and getting a hell of a lot worse. So we're in the last days of our currency. Currency manipulation has gone on for most of our lives, and in the current format, and it's been in many different formats previous generations as well. So it's a very slow process. So if we look at a 10-year or a 5-year sort of period out of 50 or 100 or 200 years worth of history, it's not that long of a time to be waiting for that. So yeah, just my 2 cents on that. Joshua, but also just to say that I don't see a hyperinflation where everything's going to go up 1,000% in a day. I see it being more gradual here in Australia. Things could double in 6 months or 12 months, and then double again in the next 12 months, and then slowly, it all starts with a bit of momentum, and then it just rolls on and continues. So. Josh, very interested in your thoughts on the Grafton Gold Coast for buying next properties. The markets are cooked and still cooking. Josh, I've been talking about buying up in those areas for many years. What is my thoughts on it at the moment? You can go and pay a lot of money for these properties, but the market is much more sort of inflated. So I don't go and involve myself in markets that are inflated. I like to go find the markets that are depressed, and that is why my life is not so happy on one aspect, because I'd rather the whole market fucking cave in and prices take a nosedive in every area. So that would be my biggest wish. But unfortunately, we're in a market which is moving, and we've got to navigate through what's going to get us to our goals. I'm not fixated on any area or geographical location. I'm here in Cooktown at the moment, which is far north, right at the top of the peak of Queensland. We have to go off the map here and look right up here, where I'm somewhere around here right now. And that's where the deal took me to go, so that's why I bought it. Do I suggest people to go buy in Cooktown? Not at all, but this is a big sort of 32-room hotel, which is why I went here. If I could find this in Sydney, of course I'd buy it in Sydney, but the numbers need to stack up. The numbers are what are important. The deal is where can you find those numbers. So if the numbers aren't stacking up in the Gold Coast for you, then go and look somewhere else. What are your thoughts on old style 2-bedroom units in Western Sydney? Will they hold their value for now? Yes, been very, very aggressive out there. A lot of things been going on out in Western Sydney, which is great. We've got some of those markets in all-time highs at the moment. Very, very hot, some of those markets. There is some markets in Sydney that are so fucking cheap, like 100 grand less than what they were 2 years ago. When I say that, like 20% cheaper, and the value is very, very strong. So there's some very, very good buyers out there. Mark, after Job Seeker and Keeper and Maker, what new ones do you think are next? It's probably going to be some sort of commie digital currency. Get a jab, get a dollar, get a ID card, get a dollar, get a digital wallet, get a dollar, trade in all your cash, get a good digital dollar. There's going to be, there was a thing back in the day. It was called cash for clunkers. They used to swap your cars around in late 2008, 2009. They started the stimulus package where they bought cars off people, shit cars, because then they squash them, take the minerals out of them, and then it forced people to go and buy a new car. And the new cars had debt attached to them, so it injected liquidity in the system. That's why everybody now is buying a car as a financial instrument, not as a vehicle to drive from A to B. So I think we're going to see a lot of new stimulus packages come out. They've surprised me with a lot of things that they have done, but I think there's a lot more to come shortly. Gemma here has got Gemma from our office, our IR Investor Relations Manager. Awesome to see so many of our family names here. Hello to all my hustlers here doing great things. If you'd like to talk to the team, email at admin@binvested.com.au. Look forward to the chat. So give Gemma a smash up the like if you chat to Gemma on a day-to-day basis. She's really good at keeping the glue to what we do together here. So Sam, is that a good opportunity to turn negative geared places into decent assets in the next 24 months? I believe so. A lot of things are becoming positive cash flow when you don't have to pay for the mortgage, so it's pretty cool. Bevan, I hope you're doing well, mate. I think Gemma's going to speak to you shortly, Bevan. I asked her to touch base and give me a bit of an update today just on where to and what next. Harpreet, I thought we'll hear from you soon, today or tomorrow. I hope you know what I'm talking about. Excited for that. Hey, we'll catch up shortly, mate, and help you kick ass with your goals. So it's cool to see the progress of the last sort of 6 months, 8 months for you. On that note, it is a bit of a wrap. I've got to keep it to the time being 1 hour. I've got a transition team here, doing IT changeover, management changeover, all that sort of stuff, as we transition this motel property under the group of companies. So on that note, I just want to thank everybody for tuning in. Your want for me to do these Facebook Lives is fun, and I do respect that. I want to try and be here as much as I can. I will continue to keep doing these. As I said beforehand, I want to try and do them more ad hoc, so don't expect to see me on a Tuesday night, but if I'm going to do a Facebook Live, it's going to be no other time apart from 7 o'clock Sydney time, whether it's daylight savings or normal time. 7 o'clock in Sydney, I will pop on when I can and have the opportunity to. I was trying to actually do it last week, right? I was trying to hop on last week in the office, but the problem is that I was going away for a while and I wouldn't have been able to get everybody their podcast. So I filmed in that time slot sort of 3 episodes of No BS with Birchie, which you, if you don't know how to get it, you can get it from Apple, Google, or Spotify, and hit up the team if you get stuck and need to get access to that. But yeah, we'll catch up soon. If you do need help, remember, just call the office, 1300 367 925. Don't trust what you're seeing in the media. It's all a fucking scam. And if you need to find some sources of truth, some sources of knowledge that you wouldn't necessarily find out there in TV or documentaries or whatever, make sure that you subscribe to birchfeed.com. I have been a little bit short for time to post content in there, but when I do, I'd like to make sure I get great content there for you guys. So make sure that you do check that out, and we'll catch up in a week or 2 or 3 or whatever I see you guys next. So thanks a lot for watching, and sorry that it's been a bit clunky tonight just due to the fact of my weird location. Have a great night. Bye for now. See ya.